Most people believe the battle between NVIDIA and AMD is about stock prices, quarterly earnings, or gaming GPUs. That assumption is dangerously shallow. This is not a simple competition between two tech companies. This is a structural war over who will control the computational backbone of the modern world. Artificial intelligence, cloud infrastructure, defense systems, autonomous vehicles, financial markets, and even future medical research all depend on advanced chips. Whoever dominates this layer doesn't just sell hardware, they shape the direction of entire industries. NVIDIA currently looks like the uncontested leader, riding an unprecedented AI boom. AMD, meanwhile, appears quieter, less celebrated, often framed as catching up. But history teaches us something critical. Markets often crown winners too early. The real victors are rarely obvious in the middle of the war. To understand who truly has the upper hand, we must look beyond headlines and price charts and analyze architecture, software ecosystems, manufacturing dependencies, and long-term strategic positioning. Only then does the real picture emerge, and it is far more complex than most investors realize. NVIDIA's real weapon is not hardware, it's control. NVIDIA's dominance does not come from selling powerful chips alone. Its true advantage lies in control over the AI ecosystem, especially through CUDA, its proprietary software platform that locks developers into NVIDIA hardware. CUDA has been refined for more than a decade, becoming the default language of AI research, data centers, and machine learning frameworks. This creates a powerful network effect. Developers write code for NVIDIA because everyone else already does, and companies buy NVIDIA chips because the software is optimized for them. This is not accidental. It is a strategic moat. On top of that, NVIDIA positioned itself perfectly before the AI explosion. When generative AI demand surged, NVIDIA already owned the high-performance GPU market used for training large models. That allowed it to command premium pricing, extraordinary margins, and unprecedented bargaining power with hyperscalers like cloud providers. However, this strength comes with risk. NVIDIA's valuation assumes continued dominance, continued scarcity, and continued dependence on its ecosystem. Any disruption, technological, regulatory, or competitive, would hit NVIDIA much harder than companies priced for imperfection. Dominance is powerful, but it also paints a target. AMD's strategy: slow, structural, and dangerous. AMD's approach is fundamentally different. Instead of building a closed ecosystem, AMD focuses on open standards, cost efficiency, and architectural flexibility. Its chiplet design strategy allows it to scale performance while keeping manufacturing costs lower than monolithic designs. This isn't flashy, but it's highly effective. AMD has already proven its ability to take market share from seemingly invincible competitors before, most notably Intel in CPUs. In data centers, AMD's EPYC processors steadily gained adoption because they offered better performance per dollar. In AI, AMD is not trying to replicate NVIDIA's software lock-in overnight. Instead, it is betting on open-source alternatives and industry frustration with vendor dependence. Large customers do not like being trapped by a single supplier. Governments, cloud providers, and enterprises all seek diversification. AMD doesn't need to beat NVIDIA outright. It only needs to become good enough, cheap enough, and available enough to break NVIDIA's pricing power. That is a dangerous position for the market leader, because erosion happens slowly, then suddenly. Manufacturing reality, the hidden weakness. Both NVIDIA and AMD share a critical vulnerability that few retail investors fully understand. They do not manufacture their own chips. They rely heavily on advanced foundries, particularly Taiwan's semiconductor manufacturing ecosystem. This creates geopolitical, logistical, and supply chain risk that no amount of engineering brilliance can fully eliminate. Any disruption, Political tension, export restrictions, or capacity bottlenecks would impact both companies simultaneously. However, the impact would not be equal. NVIDIA's business model depends on high-end, cutting-edge nodes which are harder to replace and more sensitive to supply constraints. AMD, with its modular designs, may have more flexibility to adapt across nodes and suppliers over time. Manufacturing dependency is not just a technical issue, it's a strategic one. Governments are increasingly treating advanced chips as national security assets. This introduces regulation, export controls, and political influence into what used to be a purely commercial market. The winner of the chip war won to just be the best engineer. It will be the company best positioned to survive a fragmented, politicized supply chain. Valuation versus reality. Where investors get it wrong, markets don't price technology, they price expectations. NVIDIA's valuation reflects near perfection, sustained AI demand, minimal competition, stable geopolitics, and uninterrupted software dominance. That is a fragile assumption set. AMD's valuation, by contrast, reflects skepticism, slower AI adoption, weaker software, and follower status. Historically, markets tend to misprice transitions. Leaders are over-rewarded for the present, while challengers are under-rewarded for the future. This does not mean NVIDIA will collapse or AMD will suddenly dominate. It means the risk-reward profile is asymmetric. NVIDIA must execute flawlessly to justify its price. AMD only needs incremental success to outperform expectations. That difference matters enormously over long time horizons. Investors often confuse best company with best investment. They are not the same thing. AI demand will not be infinite. Competition will rise. One of the most dangerous assumptions in today's market is that AI infrastructure demand will grow endlessly at the same pace. In reality, infrastructure cycles always normalize. As supply increases, margins compress. As software matures, hardware differentiation declines. Over time, AI workloads will diversify and cost efficiency will matter more than raw power. This environment favors competition. Large buyers will push for alternatives, governments will demand redundancy, and open ecosystems will gain traction. NVIDIA will remain a leader, but leadership in technology is rarely absolute or permanent. AMD's role in this future is not to replace NVIDIA, but to cap its dominance. And once dominance is capped, market dynamics change quickly. Final verdict: who is really winning? So who is the real winner in the NVIDIA versus AMD chip war? The honest answer is uncomfortable. There is no single winner. Yet. NVIDIA is winning today, decisively, by owning the AI narrative, ecosystem, and margins. AMD is positioning itself to win tomorrow by betting on openness, cost pressure, and long-term structural shifts. This is not a sprint. It's a multi-decade marathon shaped by technology, politics, and economics. The biggest mistake investors can make is choosing sides emotionally instead of understanding dynamics rationally. In wars like this, dominance fades, challengers rise, and power redistributes, not in headlines, but quietly, quarter by quarter. The chip war is far from over. In fact, it's only entering its most dangerous phase.